What's up, everybody? How you doing today? My name is Ryan. I'm going to talk about cryptocurrency today and how it's being reported, what are taxable events, all this stuff that you need to know related to taxing cryptocurrency. Hopefully you'll find this video helpful. If not, I'm doing a terrible job. But first, let's get started with what is cryptocurrency. I mean, do any of us really know what cryptocurrency is? Probably some of us do. I sure as hell don't. Like, if I had to tell you what it is, I would say it was it's like if you go on your online Wells Fargo account, let's say, and you see a number of dollars associated to your account, that's kind of like, the money that you have, right? But you can actually go to the bank and withdraw that money into physical cash. But cryptocurrency is a similar thing, but you can't withdraw physical currency. It's just all digital assets, digital currency that you can sell things, you can buy things with, you can sell things for, you can exchange the money for other things, you can swap cryptocurrencies, one crypto for another. All in all, it's just my favorite way to acquire drugs. Nah, I'm just kidding. But really, cryptocurrencies are technically they're considered assets according to the IRS. They're considered property, so they're treated as if you were buying and selling property and assets, not treated as if you were buying and selling currency, like foreign currencies and stuff. So that's something that might be a little confusing. Like, yes, it's a type of currency where you can exchange for products and services, or you exchange for another type of currency, but they're treated as assets in terms of taxes. How are cryptocurrencies taxed? Well, there's a few ways here. Obviously, if you sell cryptos, you will be taxed on the capital gains if you sold it for more than you bought it for. If you sold it for less than you bought it for, you'll be taxed on the capital loss. If you earned money by providing goods or services and you got paid in cryptocurrency, that's a taxable income as well. That's not technically capital gains, it's more like earned income. If you're buying and selling something from your own business, that would be like self-employed income. So that has to be reported as ordinary income with self-employment tax on your tax return. If you earn crypto by staking, it's like when you hold crypto and then you just get like little bonuses here and there, that is also reported as ordinary income. So there's capital gains, capital losses, and ordinary income that can be used to designate cryptocurrency income. Now, before I continue, you must know that even though you might think cryptocurrencies are like anonymous and can't be traced, well, unfortunately, they can be traced pretty easily, which is why I stopped buying drugs with them. Again, I'm kidding. But the IRS has started hiring blockchain analysts, and they started partnering with exchanges like Coinbase and Bracken and all that stuff to make sure they are tracing who's having high volumes of transactions and are they reporting that income on their tax return. Because all these things, if you earn money, should be reported on your tax return as income. So not quite as anonymous as you may think. Criminals have been traced through crypto and blockchain. Before we had the technology, I think Bitcoin was considered pretty anonymous. You can do all this crazy shit with it and not be traced and not be found out. But now you can actually be found out pretty easily. What are the types of transactions that are taxable? The first obvious one is selling cryptocurrency. If you have some cryptocurrency and then you sell it for regular dollars or regular currency, that's a taxable transaction. That means that if you sell it for more than you bought it for, you have to report a capital gains. If you sell it for less than you bought it for, you report a capital loss. Swapping one crypto for another crypto, that is a taxable transaction because technically what you're doing is you're selling one crypto, okay, that's a taxable transaction right there, and then you're buying another one, but you're just skipping the middleman of exchanging it for a regular currency. So swapping one crypto for another is a taxable transaction. Keep that in mind. So as you're, trading and trying to day trade crypto and doing all this crazy shit throughout the day, just keep in mind everything that you're doing might be a taxable transaction. Even buying services and goods with cryptocurrency can be a taxable transaction. I'll give you an example. If you buy, let's say $100 worth of Bitcoin today, tomorrow Bitcoin is worth $150 and you bought something for $150 with that same amount of Bitcoin. You technically just made a $50 gain there because you bought it for 100 and then you bought Bitcoin for 100 and then you bought something else for 150. You gained $50 there. So that's a capital gain that you have to report. And lastly, obviously, earning money for goods and services and being paid by cryptocurrency is a taxable event as well. I mean, that should be the most obvious one. But again, just because it's paid in crypto doesn't mean it's not traceable to you. So, it's not quite like cash. If you want to avoid taxes, just get paid in cash. You know what I'm saying? I'm just kidding there. But really, cash is even nowadays more anonymous than crypto. So, report, and obviously I have to say, if you earn money and get paid in cash, you should report that income as well. But all in all this to say is the amount of US dollars that you earned and paid in crypto is the amount of money that you should be reporting. So if you get paid 1 Bitcoin for something, and let's say on that day or that moment, so that Bitcoin is worth $105,000 in that moment, that is the value you'd use to report your income when you got paid that 1 Bitcoin, okay? So this is where record keeping is super important. The day that the transactions happens, the value of the coins or the cryptocurrency when you got paid that day, that's all really important for reporting on your tax return, because obviously you can't file your taxes using cryptocurrency as the currency. You got to use it in US dollars. So make sure that you are keeping track of what the value of the cryptocurrency is on the day that you got paid. So that brings me to my next point. What is a non-taxable transaction? All right, these are some good ones. First non-taxable transaction is buying cryptocurrency. Simply buying cryptocurrency with regular currency, not buying it with a different cryptocurrency, but buying it with regular currency is non-taxable. It's kind of like buying stocks. When you buy stocks and you just don't do anything, that's a non-taxable transaction. Also, holding cryptocurrency is non-taxable as well. Similar to holding stocks, if you haven't sold it, you just bought it and you're holding it, the act of holding it is non-taxable. Transferring the same cryptocurrency from one wallet to a different wallet is also not taxable. This is, between wallets that you own. So if you transfer from like Coinbase to your unsecured wallet or whatever on your USB drive, that's a non-taxable transaction. I don't know what that's called. Again, my crypto knowledge is garbage. But my crypto tax knowledge is not. It's a little above garbage. Anyways, transferring from one wallet to another that you own is non-taxable. And the last thing is gifting cryptocurrency. Generally not taxable. Don't worry, I know you're gonna say, oh, what about gift tax? Well, I won't get into it in this video, but gift tax has a pretty high lifetime exclusion. And if you make large gifts, you may have to file Form 709 with the IRS, but in general, giving cryptocurrency as a gift is not taxable. However, if you have cryptocurrency, sell it, and then for US dollars, and then give the US dollars as a gift, that may be taxable because you sold the cryptocurrency, right? So just keep in mind, anytime you start with a cryptocurrency and then you end up with something else, that could be a taxable event. So what is new in 2025 for reporting? Now, as you know, Coinbase, some of the exchanges out there, particularly Robinhood and Coinbase, they offer securities and they offer cryptocurrencies, and they have been kind of reporting cryptocurrencies on their 1099B forms, like the transactions of cryptocurrencies. Well, there's a new form that was issued in 2025 called the 1099DA, Digital Assets. This form is to be filed to the IRS and to you as the customer of the exchange and it's supposed to report all the transactions that you've sold, all the cryptocurrency transactions that you've sold for the year. Now, the thing to remember about this form is, for 2025, the exchanges are not required to report your cost basis. That will happen in 2026, but you should be responsible enough to track your own cost basis. Why is this important? Well, let me tell you. When you sell a cryptocurrency, let's say you have one Bitcoin. In one Bitcoin, it's worth $100,000 for today. Let's make it easy round numbers. You bought it for $90,000 a year ago, let's say, but today it's worth $100,000, and you sell that Bitcoin for regular dollars. And so technically your capital gain on that is $10,000. Let's omit all the fees, transaction fees and stuff. So, because you had a $100,000 sale, you had a $90,000 purchase price, the difference is $10,000, right? That purchase price is your cost basis. So if you were to get a 1099 digital asset form this year, it's going to show the selling price of $100,000, but it's not going to report your $90,000 purchase price. And if you don't properly track your basis and you don't report it correctly on your tax return, you might end up paying taxes on a $100,000 gain rather than a $10,000 gain. So something to be aware of this year. The basis reporting is set to be required in 2026. We'll see what happens there. You know, things always change, like the 1099K issue the past few years has changed quite a bit. Okay, so that's a pretty decent amount of information. The last thing I wanted to touch on is, integrity in reporting it on your own tax return and what that might look like. There's a question on the 1040 that asks, have you purchased, sold, or exchanged any form of digital currency over this past year? If you received cryptocurrency, if you bought cryptocurrency, if you sold cryptocurrency, you should be answering yes to that question. Failing to answer yes, again, like I said, cryptocurrency is not so anonymous anymore, not so shrouded in mystery anymore that the IRS can track down people that they want to. Let me give you some stats here. So right here, 52% increase in crypto-related audits happened in 2025. 52%. 52% from what number? I don't know. I'm sorry, I don't know that number, but there's been an increase in crypto-related audits. The IRS has also seized or frozen $2.8 billion of crypto assets due to 2024 tax return reporting and non-compliance. So $2.8 billion in crypto assets have been frozen. And lastly, they are actually issuing summons, or maybe some might call it subpoenas, to exchanges, to crypto exchanges like Coinbase, Kraken, to request information on high volume traders. So they can be engaging with Coinbase and all these exchanges to request more information on these traders that have high volume and making sure that they're reporting on their tax return. So if you're thinking of, being sneaky and shiesty with your crypto transactions, I'd be very careful. Like I don't recommend not reporting things just because you think you can get away with it. That's tax fraud, that's tax evasion. And while a little tax fraud here and there is fun, you don't want to get in trouble. I don't want you to get in trouble, okay? So just be very aware of what could be reported, what's being traced. And as the years go on and as technology gets better, there will be more and more ways for the IRS and the state governments to track what is being done transactionally on the crypto market. So that's all I got for today. Thanks for watching. If you found this video helpful, please subscribe and please like the video. I really appreciate it, and I'll see you next time.
They act like they ain't know. Guess I gotta hit them with an update. Okay. I've been getting to it when I'm up late. Hit it when you went the front gate. They act like they ain't know. Hold up. Guess I gotta hit them with the update. Really with it, I ain't got a pump fake. Killer flow and hit them with the one take. Act like they ain't know. Guess I gotta hit them with the update. Okay. I've been getting to it.